Hi, it's Michael from McLeod. What I'm going to show you today is how to do the year-end process. Now this is just here, probably just income for the year, so some trust distributions, income from managed funds, dividend received, some concessional contributions, obviously some gains and sale of assets, some insurance premiums, and one of the members is on a pension. So this one will cover off how you deal with exempt current pension income and other issues as well. So the first thing you need to do is go into periods, financial years, and then you go to the year concerned, and off this one's the 1920 year, so we click on year-end process. And the first thing you'll come up to is a wizard, which has a series of steps which you do in turn, and as you do each in turn you save what you've done and then you move forward. So the first thing obviously is the market revaluation. So I'll just in this case review and edit asset prices. You can accept calculated values if you have up-to-date values as at 30 June, which we do for anything listed on the ASX. So obviously here we've got a few assets here, the ANZ shares, Telstra shares, and ETF, and all those market values are as at the 30th of June. But as you can see here, there's some managed funds here and obviously a few reinvestments. You need to make sure that the value is correct for each of these parcels. So this one is now $1.10, and all these are $1.10. So you just need to put down $1.10 for every single parcel for this. And so once you've done the $1.10 for everyone, the valuations have gone back up. And now you click on Save Revaluation. This now revalues all the assets. And then you can obviously go through and change them again if you think you've got something wrong, or maybe you missed one of these $10s out, or you do have a query about a particular valuation. But then otherwise click on Year-End Process. Next one is trust distributions. In this case, we've got two, in effect, trust distributions. The first one I've actually already completed. That was the VAS. So obviously you can once you click on this here, you've got the VAS ETF, and I've already input the figures in here for imputed credits, taxable income, discounted capital gains, and the like. Now obviously to add another one, which there is another one here, you then select the other one, which is the Charter Hall fund. In this case, it's just only got taxable income, net of tax, and nothing else. So once you've done both of these, you need to click on Save. This will then save the information into McLeod. The next thing is the tax profile. Now, because in this case we've got both a accumulation member and a pension member, you can just select accumulation and pension and click on Save. You also do have an alternative to review and edit the tax data, and you can go through and do that. But if you just click one of these, the system automatically calculates the tax data itself anyway. So click on Save. And now the next one is members weighted average. So again, what I'm going to do is you can accept default. The system will automatically calculate for you. But obviously what I'm going to do here is just going to show you what you can look at. And you click on Edit. As you can see on this screen, it's worked out the split of the profit and loss, 52.46%, 47.54% to Caroline Brown. And obviously you can actually look at how does these figures get calculated. So in this case, you can look at the P&L MVA report. And as you can see on this screen, what it shows is the transactions during the year for each of the members, including the accumulation account where there's no transactions, and it sort of weights them depending on when the transaction occurred. So as you can see here, obviously there's some successful contributions coming in, and it sort of weights them based on this 349 days for this particular transaction to be there. And obviously that takes account of the tax as well. So that's the original amount's 2,750 and take off 15% tax, and then it weights it. And obviously does the opposite for pensions being paid out. And obviously, as you can see here, there's $12,800 of pensions paid quarterly, and that's all worked out on how that weighted average works. And again, there's an expense here for $1,200, which is insurance. And so again, it just, this step works out the calculation. So we come to 52.46 end of the year and 47.54. And now go back to the previous screen. Now, as you can see here, as I said, we've got those there. So we'll go back to the year-end process. If you do want to change them, you can and override the figures. But at this stage, I recommend you normally accept those figures unless you think should be something else. So this one we now will go accept and click on save. And now, we've got the ECPI calculations. So we just need to look at this one, and then we basically, depending if segregated or unsegregated, generally it's going to be probably the unsegregated proportional method unless you've created assets in someone's name, and click on save. Now what we've got here is some figures here that we need to input in. So the figures we're going to put in here are basically, I've already pre-calculated this, but it's effectively a percentage of the income that relates to the pensioner member, which in this case is 28,985. Obviously things like concessional contributions for the other member aren't included in the calculation, but you just work out what that is. You need to work that out offline. And the eligible deductions is what's deductible for effectively the fund itself. So in this case it's $17.99. You click on save here, and then what you might find is you come up with this thing here for deductions here. So you click on the deductions. We need to manually allocate these particular deductions. So what I'll show here, these are the deductions here where probably may need to be manually allocated. Now obviously the $1,200 relates to just the member who is in effect entitled to that deduction. So the $210 is their share of the SMRF audit fee for the pensioner, the share of the $136 of the management expenses, which is the SMRF annual fee. And obviously here we have other amounts. The first thing you do, you just need to allocate it to a type of expense. So in this case, I'll put both of these as other amounts. And the amount here is $314 of that, which relates to the pensioner member. As you can see, that now this calculates that $17.99 eligible, of the $660 not eligible, and that's also reflected down here in total deductions, and the $660, which are non-deductible. Now you click on Save Deductions. This should take you back to the screen here, the year-end process screen. Next screen is to allocate year-end entries. And then you click on here, Allocate, and this will allocate all those transactions to the members. So the income, the expenses, and the like. So you can review all the transactions here. I'll just show you through this process what the tax screens effectively look like. So as you can see here, we've got the valuation. This is all read only, so you can't do any adjustments here. Then you click on Next Trust Distributions. And then as you can see, here's the trust distributions we entered earlier. And then you click on Capital Gains. Now, as you can see here, this just shows you the capital gains discounted the amounts from trust distributions, which is 1,040 is double what was included in the trust distribution, 520. And then obviously other capital gains, which are those that are effectively made within 12 months. There's a capital loss there, and obviously it then works out the concession of 5346, which is basically a third of the 16,040 here. And now click on the next income, and after the capital gain comes through here, and all the other income of gross interest, dividends, the public unit trust income, assessable personal contribution, or assessable employer contributions, and obviously the exempt current pension income. And deductions is a screen we've seen before, so in effect has those particular ones there. And then income tax is the next screen. This just shows you the taxable income, the tax on that taxable income, and obviously things like imputation credits down here, $10,408.57. And again, you got the 259 Smurf levy, and that obviously leaves the amount due or refundable, which will be reflected in the accounts. Now, if there are any losses here, like capital losses not used up, they will be reflected in here, and also tax losses as well. We'll go back to the year-end process. Now to roll over, you can just roll over here. If you want to reset because you've made a mistake, you click on reset, and that will reset everything from step 1 to 7. And then you need to start again, even though things like trust distributions will still be there. If they are wrong, you just need to override them or remove them. Click on roll over, general ledger, and close year. And then that's now saved. So that's now done. So now if you look at I'll just quickly have a look at some of the reports. So just look at the statement of financial position comparative. And we'll just change the filter. So the 30th of June 2020, generate the report. Now we've got the 2 years, and also got the equities, income tax payable 5402, franking credits, imputation tax credit, and also the sundry credits, which happens to be the Smurf fee, and also just split up between the two members. As you can see here, there's 557,963 and 512,631 for the two members here. One's the pension account and one's the LSO. And the other thing, in terms of the member benefit statement, so all these reports are now completely updated, and it's only once you finalise the process that these will now be accurate. So again, we just change the filter back to the 2019-20 year, generate the report. And now, as you see, this accumulation account, but that's nothing in it. And now it looks at, the Fred Brown, obviously, his opening balance, his share of net income for the year, the pensions paid, and his closing balance. And for Caroline Brown, again, effectively the total benefits, which made up of the opening balance, employer contributions, share of the profit, and obviously the taxes, contributions tax, income tax, and the insurance policy premiums paid out. So that's those reports. Now, in terms of lodging a tax return and getting the data, we go back into financial years. You can download the tax file for Lodge IT. So this is where you click on here, and this will take you to the screen. You can prepare the extract, obviously input details like the auditor field and the like, and obviously you could add the EFT accounts are here, and you can sit there and say, well, this is where the tax refund's going into, and then you download the tax data extract, and you obviously lodge it with Lodge IT. But that's probably all to explain about the year-end process, and it's obviously that had included the cases where you have a pension, but obviously if there's no pension, it is a little bit simpler in terms of the process, because in effect you only have to do accumulation only for the tax profile. Anyway, thank you.